Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague Yatin Mota joining in from the studios. Hi Yatin. It was a sixth straight day of gains on the index. I think it offsets the six straight days of losses that we saw before. We started this leg of up move. But yes, 25,000 mark. We've managed to defend that level on a closing basis once again. In fact, we did come off the day's low, so to say, off the day's high. I beg your pardon, 25,150. That's one level that we hit, but we failed to really hold on to those levels. They cooled off slightly, but we did, of course, manage to end in the green. But the mid-cap index took a pause today. So that index ended in the red, down about half a percent or thereabouts. Sectorally, it was a mixed picture, but the good point is that Pharma index made a good comeback after three straight days of losses. This entire week the Pharma index was out of favor, but it's back in good health today. That index gained somewhere around a percent or thereabouts. In terms of other movers, you had the real estate pack that was extending gains for a fourth day, but autos came under some bit of profit taking, and so did FMCG after three straight days of buying. Aside of that, if you look at the breadth, it was a neutral, 1:1, but I think mildly skewed in favor of gainers. So no complaints there. And in terms of the individual movers, you had the likes of Cipla, Dr. Reddy's, Bajaj Finserv, ICICI Bank, SBI Life. Of course, quite a few Qs as well. Life insurers were in focus, given the fact that state governments have also given their go-ahead for removal of GST on insurance premiums, which is why I think the likes of SBI Life, HDFC Life were in focus. Another talking point, of course, will be the longer tenure for FNO expiry, right? That of course Yatin will touch upon in greater details, but capital market theme was under pressure, the likes of BSE.
Yeah.
On the headline indices front, in terms of the laggards, Coal India, Tata Consumer, Eternal, Bajaj Auto, these were some of the laggards. But Yatin, before we touch upon the capital market theme,
Yeah.
Clean Science was also another stock that was in focus today. There was a block deal, but there was some fat finger
Yeah.
error that led to some volume spike in the counter,
Absolutely.
right? Hmm.
Yeah, so there was a punching error. You can call it a fat finger because instead of selling 24% equity, I think the broker Avendus Spark, according to the management conversations with CNBC TV 18 and the subsequent exchange filing, reveals that instead of 24% stake sale, there was an error in punching, and probably that led to the shares not only trading two times, but a huge fall was seen when the transaction happened, between 9:15 to 9:30 a.m. in the morning, and instead of 24%, almost 50-55% equity got changed hands. So yes, there was a punching error because of which we saw the stock become more volatile, very high volumes being traded on the counter. However, the management clarified that they have not placed order to sell more than 24% equity, and the brokerage, Avendus Spark, is probably reconciling the trades, indicating that that's yes, indeed, there was a fat finger or a big issue there. So yes, Clean Sciences, that stock saw almost 13% intraday volatility after this block deal error.
That's true, Yatin. What about the other movers today in trade? Of course, capital market theme
Yeah,
was in focus, which of
yeah.
course we'll talk about in greater details later. But what were the other movers?
So I think if you look at Nifty 500, there was volatility there. Advanced decline ratio was almost 1:1. So last half an hour was the place where some volatility was there. IDBI Bank, after Deepam secretary commented that probably from here on the bidding process would start. That stock moved 8% in trade. Lemon Tree, Tejas Networks, and India Cement. And remember, today Ultratech Cement sold 6.5% stake via the offer for sale route. That process is on. That stock saw 6% move coming in. What was not doing well, Ola Electric, after 20% up move yesterday, fell 8% today. BSE 8% down, Angel One 7% down. We'll talk about these stocks in detail later on. But JK Cement and Carborundum Universal, which were the stocks which moved yesterday, saw some huge profit taking in trade today.
All right, those were the movers in trade today. But before we move on to our stocks, here's a message for our viewers. If you really want financial freedom, if that's your goal, then Super Pro is your superpower. Get live trading and investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp all in one. And right now, with our special financial freedom offer, get the annual plan for just 2,499 rupees, down from 7,499 rupees. Well, that's a great discount going. So viewers, you can't miss this chance. Download the Money Control app and subscribe today. All right, then on that note, let's talk about all the stocks that are on our radar. One IT stock that was in favor today was Hexaware. That stock was up somewhere around 3% or thereabouts on the back of an initiation coming in from Nuvama. In fact, Nuvama has initiated coverage on the stock with a buy rating. Target price is at 950 rupees, which implies a 23% upside from yesterday's close price. Now, Nuvama feels that this company is in a sweet spot in terms of growth as well as value. Now, this stock has seen faster growth compared to its IT peers, even the large cap ones, and of course, even the mid cap ones that reported numbers that were below expectations. Even Hexaware, for that matter, margin and revenue missed expectations, but the management was pretty sanguine about September quarter being a better one compared to the last one. It follows the calendar year in terms of it's a year, it's a reporting year. So yes, it expects the September quarter to be far better. And of course, in terms of what Dumama has to say about this particular counter, it says that it is extremely cheap compared to other names like Coforge and Persistent, which command a higher valuation. And of course, the revenue profile of the company is within that $1 to $5 billion, right? So it's at $1.4 billion. So with this revenue profile, the company is big enough to chase large deals, and that too without compromising on growth. Now, it has solid presence in traditional verticals like BFSI and manufacturing, and US corporates in terms of BFSI have been reporting good numbers. So, spending there could go up. Of course, there are concerns around tariffs as well, but so far, BFSI is one vertical that has done well for IT companies, Hexaware included. Now, the company also has right to win in niche verticals such as professional services and high tech. It has formidable presence in growing segments such as travel and healthcare as well. And of course, it is also working with as many as 31 Fortune 500 companies. In fact, marquee names in BFSI, healthcare and high tech verticals within the Fortune 500 basket. The client relationships have also remained sticky. Average tenure of its top five, 10 and 20 customers are standing at 15 and 12 years or so. So yes, the client stickiness is also there. And in terms of the financials, Nuvama feels that the adjusted EBITDA margin for the company is expected to rise by 50 basis points in the current calendar year and another 50 basis points over the next 2 years. Moreover, valuations, according to Nuvama, are attractive at 24 times the calendar year 26 and 28 times calendar year 27 price to earnings. If you look at the valuation picture, Hexaware is valued at 30 times compared to Coforge and Persistent, which command 35 times and 48 times. But of course, it's a little expensive compared to large cap names because they are, they've seen massive corrections. So they are trading at anywhere between 18 to 25 times. But of course, the stock of Hexaware also has declined quite a bit post its soft second quarter numbers, and which Nuvama feels, makes it a good entry point at the current juncture. And moreover, the company has also maintained its, $3 billion revenue target by 2029. So yes, things are looking good. Stock is up 10% or so in the last five sessions, but since it relisted in February, it's still down 2%. Or more, even then, Nuvama feels that it's a good entry point for Hexaware Tech, and prospects are fair and bright when you compare it to other IT names, Yatin.
Yeah, so that's the IT stock Hexaware for you. Obviously, the IPO and the relisting happened. Once it was listed on the exchanges, got delisted, and now again listed post the IPO from the private equity players. But the stocks in focus today were the capital market stocks, BSE as well as Angel One. A lot of these brokerage stocks were nervous in trade after SEBI chairman in a FICCI conference said that the consultation paper for increasing the tenure of derivative contracts will be floated soon for stakeholders consultation. Now, what does this mean? Is that probably the market participant read it as a threat for weekly options. Now, we have seen earlier that SEBI had passed interim orders for Jane Street, alleging market manipulation, and retail investors lost a lot of money in option trading. A few days back, we had the government also, announcing a ban on real money gaming. So I think the theme here is quite simple: speculation or probably addictive games, or addictive futures and option trading is something that the government does not want to promote. And this is a step in the right direction. In fact, CNBC TV 18 and CNBC Awaaz both reported, according to sources, that the exchanges also have given a proposal to the regulator that monthly, expiry contracts should be promoted along with long-term contracts and not weekly options. Why was a stock of Angel One or BSE down 4-5-7%? Is to do with the fact that a lot of volumes on the retail front as well as on the HNI desk is relating to weekly options, and once these contracts are closed or probably phased out, there could be a decline in volumes for BSE or probably a stock like Angel One, and hence there was nervousness on the street with respect to these comments and news reports.
That's true, Yatin. And I'm just listening to one of the experts on CNBC TV 18, and he said that the revenue impact on the likes of BSC could be as high as 50 to 60% because of the kind of revenues they generate from the option segment. And of course, discount brokers will also be hit quite badly, but not so much for traditional brokers because they have far greater exposure to cash segment as well. So discount brokers, the likes of BSC, they will take a severe hit on revenues. But of course, the message from the government is pretty clear. They want to end speculation and addiction of any sort. But Yatin, thank you. Then on that note, I reckon you have a meeting to attend. So, I'll leave you at that. But I'll focus in on my second stock. I'll see you tomorrow, Yatin. But let me focus in on the second stock then. Indigo, that's the other one that's on my radar. Of course, that stock earned a downgrade from Kotak Institutional from buy to add. The downgrade comes post a sharp rally that shares of Indigo have seen. And of course, recent operational pressures have also led to the downgrade, according to Kotak Institutional. The stock is up somewhere around 40% or thereabouts in the last 1 year. It has seen a decent up move. Of course, because of that, also, Kotak has downgraded the stock to add from buy. The target price stands at 6,850 or thereabouts. The stock price is quoting above 7,000 at the current juncture. But, according to Kotak, the data point is reflecting the impact of capacity cuts. Now, Indigo is slowing its aircraft induction and in fact reducing flight numbers as well. They reduced their planes per month to two vis-a-vis their guidance of one per week earlier. Now, they in fact look at they have been adding 2,000 flights per month now. This is a shift from adding lots of capacity in the second quarter. Typically, second quarter is a loss-making quarter, and they add a lot of capacity ahead of the festive season, that is the third quarter, to control supply. But now they have shifted their strategy. They are more inclined to make profits per seat or to increase yields rather than increase capacity. Now, Indigo's market share has also dipped. If you look at the month of August, month till date, it has dipped as a result of this capacity adjustment and, of course, the change in strategy to improve their yields. Of course, Kotak has also noted that this downgrade doesn't come because they are expecting any kind of let up in demand. Demand is still intact, and of course, with this GST cut or the GST rate rejig, the demand for travel is expected to go up even further, given the fact that GST on economy travel, and of course on business class travel will also fall to 5%. So the demand is still there, but there's just been a change in strategy due to the company's efforts to rein in costs. Now, Kotak has also noted that with crude prices falling and all the other factors, Indigo has still managed to keep yields stable over the last 3 years, and that's a commendable thing to do, according to Kotak. But now the Indigo is aiming for year-on-year yield growth for the festive season. So that's all in all the change in strategy that Indigo has adopted, and of course the stock is also seen a good rally which is why Kotak has downgraded the stock. But mind you, demand, of course, is not the issue here. The issue is, operational costs or operational pressures that's evident, and of course the fact that the company is also seeing some bit of market share loss as it looks to reduce its capacity. Also, the fact that the company will be looking at phasing out the damp leases in the second quarter, and the new aircraft deliveries will also be deferred. So these are all the changes that the company is doing in order to manage costs effectively. So all in all, that's about Indigo, and that brings us to the end of this show. But once more, want to remind our viewers that if financial freedom is your goal, then Super Pro is your superpower. Get live trading and investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts on WhatsApp, all in one. And right now, with our special financial freedom offer, get the annual plan for just 2,499 rupees. That's a steep discount, down from 7,499 rupees. So don't miss this chance. Download the Money Control app and subscribe today. But before I leave you, one more important cue to watch out will be the Jackson Hole Symposium that kicks off today. Of course, we'll all be watching out for the speech from U.S. Federal Reserve Chairperson Jerome Powell, but that will happen only tomorrow night. So we'll be reacting to it on Monday, but expect the street is expecting quite a few explosive commentary, given the fact that Trump has time and again called out Jerome Powell for not cutting interest rates. So that's another cue to watch out for. But another important point that I wanted to mention was the fact that the group of ministers has approved the centre's proposal of cutting down the GST slabs to 5% and 18% and doing away with 12% and 28%. Now the GOM will send the proposal to the uh, GST Council. So that's the next step to watch. So expect a lot of clarity on which category, which product will fall under which rate slab. So yes, the street will be watching out for that as well. But sixth straight day of gains. So yes, the gains continue on the Lal Street. We are at we've seen the longest winning streak in over 2 months. Let's hope we extend it to the seventh day as well. Of course, it's the last trading day of this week tomorrow. Hopefully, we will manage to continue with this momentum as well. But with that, I take your leave. Thanks a lot for joining us on Closing Bell. I'll see you again tomorrow morning at 9 a.m. with Opening Bell. Don't forget to tune in. Thank you and have a great evening.